Hi there, welcome to this week's midweek market analysis. So, as usual, we're gonna cover quickly what has happened for the week and moving forward, what are some of the opportunities to keep an eye on. Now, if you are looking at the market and you're monitoring for yesterday's CPI data, you do realize that the actual data came out was 7.1, which is a significant I would say significantly lower as compared to the previous month of 7.7, and we are starting to see that perhaps the inflationary pressure is starting to ease off a little bit. Okay, and for that reason, we did see a little bit of a sell-off in the dollar mainly, and of course most of the major pairs. Okay, and if you manage to capitalize on that short-term move, that's great. Okay, so moving forward, let me share a view from a swing trade perspective, from a mid to longer term perspective. Anything has changed and what we need to take note of. Right, so if you take a look at the dollar index first, okay, so yesterday you can see that little candle over here, that was the CPI release data. Okay, it kind of came back and retested at 127, which is basically the level that we anticipated to complete that diagonal. We did see that reaction from the 127 extension, but I think right now it's a little bit too early to conclude whether this is kind of a bounce or not at this moment. Okay, so that's why for now I would suggest that perhaps you want to just maintain a neutral perspective on the dollar. Anyway, later midnight we do have the FOMC statement. The market is expecting the Fed to hike it to 4.5. But of course beyond that is more important, which means that after this perhaps 4.5, what's next, right? Is the Fed going to be slowing down its rate hike, or is it going to be peaking soon, and etc., right? So you need to monitor the language that the Fed is going to release during the FOMC statement too. Okay, so we're maintaining a rather neutral perspective. If we can get a decent bounce off in terms of a V shape followed by a corrective structure, we can see more upside in the dollar. Alternatively, if this just develop into a corrective pattern here, there might be more downside, but I may not be very interested in that because the overall structure remains very much as a crawl or a diagonal. Okay, so that's the view on the main generally in terms of the dollar, in terms of the XY. If you go over to the euro, okay, so yesterday we did get this little candle over here, but from a bigger scheme of things, the overall structure doesn't really change at all, and it's still basically a corrective structure to the upside, so it's a crawl, and we can also see an internal smaller crawl pattern that's developing. If you bring out the RSI indicator, we can't see a divergence building up, which again suggests lack of momentum and a potential reversal. Okay, so for all those reasons, I'm actually more of a neutral right now, and I want to see if we can get a decent rejection down, a tiny bit of a correction, then that would build up a decent sell trade opportunity with a potential target at 1.0220. Alright, so give it some time, wait and see if we can get that setup coming in to us. Similarly here, of course, is the pound dollar, right? Because euro and pound are generally quite correlated. The overall structure is the same, right? Nothing much of a diff. And if you take a look at the RSI, we also get a divergence. Okay, so overall it's also downside. But be patient, right? I wouldn't be personally selling it now. Okay, so you want to give it some time, see if this comes down a little bit. That's a little bit of a flag, then you look for another trade. Okay, but if you don't get this, then there's no sell trade. Okay, you just need to be a little bit more conservative for a reversal trade. Aussie dollar is a little bit nicer and I would say clearer in terms of the structure as compared to the euro and the pound. So if you take a look at the Aussie over here, we kind of get a very nice little 1, 2, 3, 4, 5. We have this 3 little top, okay, which kind of complete the internal 5 wave within the diagonal. As of now, Aussie seems to also do developing a pretty decent little rejection from the high at 6895. So this one here, you might need to perhaps go to the 1 hour time frame, give it a day or a day and a half to see if you can get this little corrective flag. If you get, then you have the impulse correction, you can expect more downside from there. Right? And if that's the case, then your initial target will be around 6585. Okay, so among this three, I think Aussie dollar is actually clearer in terms of the structure. And then for dollar Canadian, we have been eyeing this setup for a couple of days. I think late last week to early this week, we've been looking at potentially a three-wave corrective pattern back towards that 50 FIB, around 3545. We kind of got that with the CPI. Okay, it's not the best trade because it kind of have a very impulsive move, dip down. But if today we can get a rejection and a continuation of the upside from here on, this would be a pretty decent trade to the upside, with a target at 3800 to complete the overall structure of the double zigzag, right? So you can see here we have a 1 2 3, right? And then internally here we're expecting a 1 2 3, and then from a bigger structure perspective it's a 1 2 3. Okay, so the idea here is, of course, if you don't have any trade as of now entering around that 50 area, what you can do is to go down to the lowest time frame, okay, and see if we can get a V shape followed by a corrective pattern over here, perhaps riding a little bit on the upcoming FOMC statement release. We might get that dollar strength, perhaps, right? So keep an eye on that as well in terms of dollar Canadian. So Aussie and on the CAD is a little bit clearer in terms of the trade opportunity. The rest of it, you probably need to maintain a rather neutral perspective and give it some time. Dollar yen over here is also neutral. Okay, we kind of get a impulsive drop to the downside. Overall, there are a few possibilities of how this pattern here can develop. It may be an expanding flat of a 1 2 3, okay, to complete something like that, and this would still be a 1 corrective pattern, and then this we can expect a breakout to the upside, perhaps coming back and retest this. So we need more confirmation, right? As of now, this is just one possibility. What can happen, of course, is that if the dollar continue to weaken, this can still go down and break this low. That's why we're maintaining a neutral and just be patient and see how the market develop from here. Okay, the confirmation level is 138, so if the market is able to break above 138 together with this downtrend line, then there's a good possibility we'll see more upside. Okay, but that would require some time, so just be patient. XAU, okay, so you can see this structure is actually happening across some of these major pairs. Again, a diagonal across. If you bring in RSI, we have the divergence. So again, this suggests that a lack of momentum, and you probably do not want to be buying into this structure as of now. There's a good possibility we'll see a retracement back to 1725. This is not a sell yet, but the idea here is if you can get a decent drop corrective pattern here, then we can expect more downside to it 1725, right? So keep an eye on gold as well. Crude oil is nice, right? So crude oil, we were looking at a break above 73.5, and this is there, the corrective crawl, with a stop below the recent low, right? So if you're in this trade with a breakout, then I think now is a good time to shift your stops to break even as well, okay, to where you entered. And we are continuing to look for more upside. Potential target here is 83, which is back at the recent structure high. Okay, so of course, ideally we want this to just do a little bit of correction, the momentum to carry forward, and you know, in a relatively short period of time to hit our target around 83. Right, so that's on crude oil. Just manage your position accordingly. And then lastly here we have the S&P. So yesterday news kind of shot it up, but it came back almost entirely. Okay, so kind of forming that little double top formation around 4099. Okay, this trend line is still holding, right? So that trend line, if you go over to the daily structure, that's the trend line that I've always been sharing. Don't expect this to just keep going unless we're able to break off this daily trend line impulsively, okay? Because if that is still being supported from a technical point of view, this can still come back down, retest the bottom perhaps before the bigger move back, okay, into a bullish equities market. So right now, if you go back to the forward time frame, the suggestion here is just to maintain a very neutral perspective because we want to see how this develops. If this comes down and forms a crawl here, then obviously we also have some confluence for buy. If we don't get that and this just does a little bit of a correction here, then we can still see a short-term sell. Okay, potentially if this can break this low, then it opens up more downside. So again, there are a couple of different possibilities because right now we are just seeing a little bit of a V shape. So my suggestion is just, again, be patient, give it time, wait for a clearer setup. So that's all for me. All the best to your trading, and I'll see you guys in the next one.